Good morning, everyone. Welcome to the Adam Global monthly webinar. My name is Andrea Seminelli, Marketing and Business Development Manager. Thank you for joining us today as Mr. Sayyed Abbas, CPA, FCCA, and Managing Director of Adam Global Auditing and Accounting discusses VAT rates, exemptions, and penalties. We'll just give it a few more minutes and allow everybody some time to come into the webinar. So Adam Global, we have over 200 global chartered accountants and advisors. We are dedicated to empowering your businesses through comprehensive auditing and accounting, boutique market entry solutions, and global business relocation support. Thank you for joining us this morning, everyone. Again, my name is Andrea Seminelli, and I am the Marketing and Business Development Manager here at Adam Global. Thank you for joining us today for August's monthly webinar. As Mr. Sayyed Abbas, CPA, FCCA, and Managing Director of Adam Global Auditing and Accounting discusses VAT rates, exemptions, and penalties. So now, without any further ado, it is my honor to introduce Mr. Sayyed Abbas.
Good morning, everyone. Thank you, Andrea, for the lovely introduction. So today we are going to go through VAT rates, the exemptions and the penalties, and a few other nitty-gritties, and I am very hopeful you would find it very useful. There are a number of customers and clients who are very curious about questions such as, should they get registered or not? Is it mandatory for them? Is it kind of optional for them? This would really help them to know what is VAT and what would be the rates applicable in terms of the goods and services that they are dealing in and whether they should register or not as well. So let's start with the VAT. What are the main topics in here? We would go through the VAT concepts, and we have got output and input tax. Very important for us to know the difference between the input tax and the output tax and the implications. What would be the timelines in terms of the returns and payments? And then registration threshold and criteria. What are the amounts set by the Federal Tax Authority that would guide the entities whether they should register or not? What are the optional registration thresholds? What are the mandatory registration thresholds? And then what are the penalties which the businesses could face in case of failing to get registered in a timely manner, or if, let's say, there is an amount due which they have not submitted to FTA? What could be the repercussions? What are the exemptions from VAT? And then what are the zero rated VATs? Okay, so let's go through them one by one. All right, so let's start with VAT, value added tax. It was introduced in the UAE on 1st of January 2018. And it's basically a tax which the end user is paying to the government. All right, so let's have this clear understanding. It's the end user who will eventually be bearing the brunt of paying this tax to the government. It's a tax on the consumption or use of goods and services. Okay, The standard rate is 5%. This is what they pay the end user, and it's levied at a point of sale. Businesses collect and account for the tax on behalf of the government. Right? So we have got this diagram which elaborates who's going to collect the VAT, who it would be transferring it to, and in the end of the day, who pays the VAT. It's a very good example. And we have got a farmer. In this case, we have got a factory, we have got a retailer, and we have got an end user. All right. So let's start from the left-hand side. From number 1, in this case, it's the farmer who grows dates, which are picked and sold to a processing factory. All right. So the farmer collects VAT from the factory on behalf of the government. Next step, the factory processes the dates into the date syrup, which is sold on to the retail chain. So the factory collects VAT from the retail chain on behalf of the government, and the factory receives a refund on the VAT paid to the farmer. Next step, we move on to the retailer. The retailer places date syrup on the shelves for the sale to the end user. All right. So the retail outlet collects VAT from the consumer on behalf of the government, and the retailer receives a refund on the VAT paid to the factory. And eventually the end user who's consuming the product, they end up paying VAT, or in other words, they cannot recover the VAT that they have paid because they are consuming the end product and they are the end user. All right. So this is how VAT works. So those who produce goods and services and they are selling it to, let's say, other entities or individuals, they will receive the VAT, they will pay the VAT, they will do the calculation, and based on the calculation, either surplus or deficit, they will be either paying to the FTA or they will be receiving it back from the FTA, depending on the returns. That's the main concept of VAT, and the end user ends up paying the VAT. All right, so output tax and input tax. It's very important for us to understand the output and input tax and how it impacts our VAT returns, right? So input tax, very simple. In order to do business, what the businesses do, they have to purchase goods or services. So when they purchase goods and services, they end up paying VAT. This is called input tax. Okay. On the contrary, output tax means the VAT that we receive that comes as a result of the sales. So when we make the sales, we receive VAT, right? And this is called output tax. So input tax and output tax. And then we will do the calculation. Based on that, we would see, and the difference between input and output would either be a receivable or payable to or from the FTA, the Federal Tax Authority, depending on the balance or the calculation. So I will explain it one more time. Input tax is basically when we purchase goods and services, we pay VAT. This is called input tax, right? Output tax is when we sell goods and services, we receive VAT, and that's called output tax. And the difference between input and output is either receivable or payable to or from FTA, depending on the balance. So this is input and output tax. All right. Very important for us to understand the timelines and the timelines for returns and the payments of VAT. So within 28 days of the end of the tax period, we have to file the return and pay the VAT to the Federal Tax Authority, depending on the tax return, right? Now, what are the thresholds? Whether they should do it quarterly or whether they should do it on a monthly basis. It's very simple. So the FDA has given a very clear-cut criteria for the businesses whether they should go for monthly or quarterly returns. So for those businesses who are making more than 150 million in terms of annual turnover, they have to do their VAT returns on monthly basis. For those businesses whose annual turnover is below 150 million, they have to do the quarterly returns. All right. So once again, those businesses whose annual turnover is more than 150 million, they must do the VAT returns on monthly basis. And for those businesses whose annual turnover is below 150 million, they have to do a quarterly return. Okay. Registration threshold or criteria. So what is the threshold for registration, right? It is mandatory for businesses to register for VAT in the following two cases. If the taxable supplies and imports of the UAE-based business, mind you, there's a word mentioned UAE-based business. If that exceeds AED 375,000 per annum, right? This is where the businesses must get registered. This is mandatory. This is where it becomes mandatory for the businesses to get registered. Or in second scenario, if a non-UAE based business makes taxable supplies in the UAE, regardless of its value, and there is no other person obligated to pay the due tax on these supplies in the UAE. All right. So let me explain it one more time to make it crystal clear. If the taxable supplies and imports of a UAE-based business exceed AED 375,000 per annum, it becomes mandatory for the businesses to get registered. If it's a non-UAE-based business which makes taxable supplies in the UAE regardless of its value, and there is no other person obligated to pay the due tax on behalf of that entity, they will have to get registered right away. All right. And meanwhile, VAT is optional for businesses whose supplies and imports exceed 187,500 per annum. Okay. So 187,500 is the threshold for optional registrations. There could be businesses who would be registering voluntarily, and for them, it's 187,500 per annum. All right, so let's look into the penalties now. First of all, registrations. If the business must register and they fail to register, this is where they would end up paying AED 10,000 to FTA. Right? So that's the registration, non-registration penalty, 10,000 AED. Now, if there is a tax due, VAT due to be paid, and the entities fail to pay that, there is a threshold for that. Let's go through it. So the taxable person shall be obligated to pay the penalty applicable to late payment of payable tax up to a maximum of 300% pursuant to the following. 2% of the unpaid tax shall be due on the day following the due date of payment where the settlement of payable tax is late. So 2% right away. So for instance, the due amount was 100,000 AED and the company fails to pay it on time, they will have to pay 2% right away, and that 2% would come to 2,000 dirhams, right? Now, 4% monthly penalty is due after 1 month from the due date of payment. So the penalty percentage increases from 2% to 4% if it goes up to 1 month. The delay and the payment goes up to 1 month, it will jump from 2% to 4%. And on the same date, monthly thereafter, on the unsettled tax amount to date. All right. So once again, let's go through it one more time for the sake of clarity. If the companies fail to register in a timely fashion, they have to pay 10,000 dirhams. Now, if the amount is due, if they have registered and the amount is due to be paid to FTA and they fail to pay that, they have to pay 2% right from the word go. And then that percentage would jump up from 2% to 4% if the delay is more than a month. If it's a monthly delay, 4%, and it keeps recurring every month, 4% every month. Now there's a cap that is being prescribed by FTA, that the late penalties must be capped at the same time. And in this case, the maximum cap is 3%, 300%. So the late penalties would be capped at 300%, meaning, let's say, if the penalty was supposed to be 100, the amount due was supposed to be 100K, the penalties cannot be more than 300,000, right? Now, next topic within VAT would be exemptions and zero-rated VAT. So let's go through them one by one. Exempt goods and services. So in order to understand it in a better way, basically it's a tax, it's a burden on end user, right? Now, when the government and FTA, when they design taxes, they give some sort of exemptions to the people or different types of stakeholders who should be exempt from those taxes based on certain reasons. So in this case, the exempt goods and services are financial services, residential buildings, burial land, local passenger transport. These are exempt from VAT. So this is a relief which has been given to these 4 industries. Now, the next one is what is zero-rated VAT? It's very important for us to understand and to also understand the difference between exempt VAT and zero-rated VAT. If you make supplies at a zero rate, this means that the goods are still VAT taxable, but the rate of VAT is 0%. Instead of a standard rate, we all know the standard rate is 5%. In this case, it will be 0%. You will need to record any zero-rated supplies in your VAT account and report them on your tax returns. All right, so there are a few instances where the VAT is 0%. So export of goods and services to outside the GCC countries. This, obviously, we can see the initiative or the premise behind this is that the government wants to encourage exports outside the GCC countries to the outer world. And based on that premise, they have kept the VAT rate at 0%. So those will be zero rated, right? Certain foods and beverages, which is great. So certain foods and beverages would have exemption and exemptions in a sense that there will be applicable VAT, but the rate would only be 0%. Equipment for the disabled, once again, a relief for the disabled people. So their equipment VAT rate will be 0%. Prescription medication, very important, obviously, health sector for the well-being of the residents of the UAE. So the prescription medications VAT rate is 0%. And then in the end, water and sewage services, the VAT rate is 0%, once again, to provide this relief. All right. So qualifying educational institutes. All right, let's see what is qualifying educational institutes. And this means that a qualifying educational institution shall not charge VAT on the zero-rated educational services they provide. Okay. Any educational services provided by other entities not listed above shall be subject to the standard rate, which is 5%. Okay, so that's qualifying educational institute. Now, let's say if I make exempt supplies, do I need to get registered? This is a question that we are being asked very frequently. So if all the supplies you make are exempt, all of them, you do not have to register for VAT. In such case, you cannot recover tax incurred on business purchases. Examples of such would be the owners of property who rent their properties for residential purposes. All right. So this is the difference between zero-rated and exempt supplies, that your your supplies could be exempt, but at the same time, you will not be able to recover the tax that you have incurred or during your business. And that's very important to understand, right? So who are the suppliers of zero-rated supplies? That's the next thing that we hear very often. So registrants who could be suppliers of zero-rated services and goods include exporters, real estate developers, airlines, schools, clinics, hospitals, etc. Right? And then do suppliers of zero-rated and exempt supplies charge VAT? Suppliers do not charge tax on a zero-rated or exempt supply. All right? So this was a brief webinar on VAT. What is VAT? What are the thresholds for registrations? What is input? What is output? What are the exemptions? What is zero-rated VAT? And any questions, please do let us know. We have got an amazing team of chartered accountants. And Andrea, if you've got any questions that maybe some of the participants have been asking, please do let me know. We can answer them one by one.
Yes, Mr. Abbas, we do have a few questions here. The first one is, who bears the cost of this tax?
Sure. So, well, I mean, as I explained earlier, the end user bears the cost, who cannot recover it, as it's the final consumer. So they consume the product, they do not pass it on to any other person or entity, and eventually they end up paying VAT.
Thank you. And the next question is, who collects and calculates the tax for the government?
Well, it's the responsibility of the businesses to collect and calculate the tax for the government. So it's the onus is on the businesses. And now, how do they do it? It's up to them. They can have their own accountants. They can obviously outsource it to accountants like Adam Global. We can do it for them. But yes, it's the responsibility of the businesses to do that.
Thank you for that. Okay, what is the purpose of imposing VAT?
All right, so tax, any form of tax is one of the sources for the government to generate income, right? And just like corporate tax, any other type of tax is one of the sources of income for the government to collect money, and they can then spend it on the betterment of the people.
Understandable. And the last question I have here is, what is the difference between zero-rated supplies and exempt supplies?
Yeah, we hear this question very often. And so the difference is that the zero-rated supplies can recover the tax it incurs on its purchases, while the exempt supplies cannot. That's the main difference between the two, as it is not subject to tax registration. Right. So basically what we are saying is the businesses who deal 100% in exempt supplies, they do not get registered for tax. Therefore, they cannot recover their VAT that they have paid on their purchases. While the zero-rated supplies businesses who deal in zero-rated supplies, they have the option to recover it. So basically, the zero-rated supplies is kind of better off as compared to the exempt supplies in terms of recoverability of the VAT that they're paying.
Thank you for clarifying those questions, Mr. Abbas. I believe that is all for today's webinar. Thank you for those who have joined us for this informative webinar with Mr. Abbas for ensuring we understand VAT rates, exemptions, and penalties. And as always, for additional questions and to become a part of the Adam Global Provider Network, we encourage you to reach out. Thank you, everyone.